a very good morning to all our viewers who join us on this live broadcast on Money Control. You're watching Opening Bell with me, Stacy Pereira, and I'm here to take you through all the news and cues that you need to be watching out for that could go ahead to impact your trading days. So stay with me. We have lots to be looking forward to how this week is really going to pan out. But before that, let me take you through some of the top headlines. Well, it seems like Wall Street closed the last week with some bit of losses. The Dow Jones seeing its worst weekly performance since October as February's jobs report gave those mixed signals as to when the Fed can be expected to cut those rates. We did see stock futures, though those are also trading quite lower this morning. Now, if you look at stocks in the Asia-Pacific region, those ones are too trading in a mixed range. This after Japan has gone ahead to revise its GDP estimates for the fourth quarter, pretty much averting that technical recession that it had slipped into, while China has exited its deflation territory as consumer prices have risen in China. If you look at the GIFT Nifty, that one's indicating a mildly flat to negative start for versus Thursday's close, we could say. And if you look at crude prices, those ones have closed lower as demand from China has dipped. Brent crude is hovering around that $82 barrel mark, whereas on the other side, you see gold that continues to rally at record levels as higher unemployment data supports the talk of Fed cutting rates soon. And among the stocks you need to be watching out for today, look out for Interglobe Aviation on the back of that stake sale news. There's also RVNL that has got a lot of letter of awards that have come through, whereas Vodafone, which will be seeking its shareholders' approval for the EGM on April 2nd for its 20,000 crore fundraise. And on the political front, we have the Election Commissioner Arun Goyal, who has resigned just days ahead of the release of the 2024 Lok Sabha election schedule. Following this, the three-member Election Commission has now only one member. The Chief Election Commissioner Search Committee, which will be headed by the Law Minister and comprising of two Union Secretaries, will go on to shortlist 5 names that will replace the outgoing Commissioner. Well, those were the headlines, and we are going to see a lot of action on the political front in the run-up to the election. But not that markets are doing any different. We've seen, a stellar rally all through last week. Some bit of those blips in between, where, of course, there is profit booking that could be expected. But also, let me take you through some of the F&O cues that you need to be looking out for. Now, if you look at the put-call ratio, that one has fallen to 1.27 versus the 1.32 that we saw. Remember, put-call ratio really indicates the mood of the equity markets, and now that it's above 1, that still goes on to show that there could be more volumes of put options as compared to the call options, which generally suggests a bearish market ahead. But that doesn't mean to say that, what traders have been doing and putting that hope. At least we've been seeing week after week new highs. At least all through last week, we did see newer highs from the benchmarks. But if you look at the F&O ban list now for March 11th, we did see the NSE go on to add Tata Chemicals as well as SAIL into that F&O ban list, whereas it has gone on to retain Manappuram Finance, Mahanagar Gas as well as Z Entertainment Enterprise into that list. And for that setup, just before we hit that opening bell in terms of the fund flows that have come in on March 7th, that was, remember, the last trading day. We were in a truncated holiday week last week. We did see foreign institutional investors, FIIs, go on to buy shares worth 7,304.11 crore rupees, whereas domestic institutional investors, the DIIs, also did lap up more shares of worth of close to 2,601 crore rupees. So that was the trade setup, we could say, and what we are looking at, where the GIFT Nifty is not really showing us too much of a promising gap up of sorts. We are getting a handover which is pretty much mixed in that sense. So let's get going and discuss some more stocks and strategies that will be in the spotlight today. Joining me for that is Prashant Sawant, the founder of Catalyst. Well, good morning, Prashant, and thanks for speaking with us here at Money Control. Let's look at first how the Nifty has been performing so far. We're seeing higher high formations, positive bias, momentum indicators as well. All of that really lining up. So what would be those levels on the chart that one should be looking out for? Are we moving towards that 23,000 levels in the coming weeks? What would be your levels and what should one be watching out for on the charts?
So, Stacy, very good morning. Good morning to all the viewers. And I'll just go back a week when we met last week on Monday. And my view was that Bank Nifty was quoting around 47,200. I was expecting 48,150 in spot. The high we made was around 48,160. Now, why I was expecting that level? Because it is a major resistance. I expect Bank Nifty to continue outperforming this month. But this week, I expect some profit booking on both the indices and I'll wait for a dip. That doesn't mean there's a reversal. It's a normal, healthy profit booking and a dip in an uptrend where you should be looking out for buying opportunities at lower levels. What are those levels? If I talk about Nifty, at the current levels, you're quoting around 22,500 approximately based on the pre-open and Thursday's closing. So on the downside, positionally, 22,200 holds a lot of importance in spot. And as long as this level is intact, every dip can be bought on a positional basis. From a short-term basis, 22,350 is the support, 22,350. On the upside, 22,600, 22,650 will be the next levels to track. My suggestion would be to every time that you are entering long, keep a 50 to 60, 70 point stop loss and target for 100, 150 points move. That's the way you have to approach. Instead of looking out for levels like 23,000 and holding on to losses, keep a 50, 60 point stop loss every dip and try to go long for targets around 100, 150 points. As against this, on Bank Nifty, I have a positional view. So we have hit the targets which I had mentioned last week, 48, 150 in spot. Now I'll wait for a dip. The dip should be somewhere around zones of 47, 400, 47, 300. If I get that dip and I see a bounce from that dip, I'll definitely look for going long, keeping stop losses around 46, 800, which will be around 1% risk on the index, Bank Nifty, and I'll straight look out for targets of 48,500 to 48,800 later on. So wait for a dip to 47,400, 47,300 in spot. If I were to compare both the indices, I would be more inclined towards trading Bank Nifty on the dip, and Nifty I think would be more range bound.
Right. In fact, Prashant, so much that you've spoken about Bank Nifty, are we, seeing that momentum now really gather? Because could we be looking at that 50,000 mark before seeing some more consolidation or correction? How would you really be playing it? Of course, you've given us those immediate support and resistance levels, but as a whole, the Bank Nifty and its components, we will talk about HDFC Bank in particular in a bit, but how should one be really looking at the Bank Nifty? And do you think that 50,000 mark is somewhere close?
So, Stacy, I think the major component which needs to outperform now is HDFC Bank for Bank Nifty to lead. And I think 1450 in spot happens to be a major resistance where we have reacted. If you look at the pre-open as well, it's showing a bit of weak pre-open. So track 1450, 1460 zone in spot for HDFC Bank. If we close above that, I think we can surely get a very strong move in HDFC Bank, which would have a straight effect on Bank Nifty. So I think HDFC Bank closing above 1450, 60 zone would be crucial for Bank Nifty to capture zones. My first target on the upside would be around 49,200, and then obviously the next magical level of 50,000. But as I always say, these are numbers. Tomorrow, if we are at 55,000, 50,000 would be a fearful number for you all. So, these are emotions attached to numbers. The best way is to look out for risk to reward every time you are entering the setup. And that's why I'm waiting for a dip on Bank Nifty. If I get that dip with a bounce, confirming the price, then definitely I'm looking to go long on Bank Nifty this week. Maybe after a couple of days, after the dip is over. But the index to watch out for, as you rightly said, is Bank Nifty. And HDFC Bank, major level 1450, 1460.
Right. Prashant, do stay on with us. Let's address HDFC Bank because that is going to be in focus. This after CLSA has gone on to downgrade HDFC Bank. The rating, they've revised that outperform from by what it was, but they've cut the target to just about 1,650 from the 2,050 that it held earlier. Now, the CLSA does feel that the challenges they are going to face will be on that deposit accretion, which is unlikely to manifest due to the lower loan growth is what they've said. They've also talked about twin challenges on the deposit front, where we're seeing higher ask rates as well as a tough environment to really deal with. They've also gone on to say that the net interest margin recovery will be more U-shaped rather than V-shaped, and they've gone on and trimmed that FY 25-26 earnings per share estimate by 5%. So we are going to see how that stock really reacts to it. But let me also get Prashant back on to talk about the overall banking and financial space, because when we talk about the rally of the markets, we are hoping that it will be the financials and banking space that is really going to drive this. But there have been quite a bit of regulatory overhauls that have come in the past. Also, we've been seeing RBI being quite swift. Last week it was IIFL, there was also GM Financials, and different kind of reasons for them being pulled up. But do you see, and what among the banking and financial space should one be looking at, Prashant?
So I think, Stacey, in when it comes to banking, a sector that is definitely standing out and outperforming is PSU banking. So in that, I think SBI, Bank of Baroda, Canara Bank. If you were to stack rank, it would be SBI, Canara Bank, and Bank of Baroda. So these three look very strong. I think you can add up to them. SBI eventually may show targets around 8, 10, and 20 as well. And Canara Bank also looks strongly headed to levels around 620, 630. So those are strong. As far as private banking is concerned, I think one of the laggards in this particular sector, Kotak Bank, may outperform going forward. So currently, if you look at the pre-open, it's quoting around 1765, a close above 1780, 1780, which is just a percent away from the pre-open, would be a very strong breakout for Kotak, confirming a strong base in place. So one can go long. If you see closing around above 780, you can easily look out for levels around 1850, 1860. So that would be a stock to watch out for in the private banking space. And below that, second to stack rank below Kotak Bank would be IndusInd Bank, quoting around 1560. I think you can easily see levels around 1600 on this in the week going ahead.
Interesting picks. Look at the PSUs versus a couple of select names in the private banking space. But let's also address another stock that we could see a buzz, that is of Interglobe Aviation. Now, this after the founder Rakesh Gangawal is likely to sell up to 5.8% stake is what we're given to understand. This, of course, could happen later in trade today, where the promoter would be paring his stake from the earlier. What was planned was just about 3.3%, but now what we're getting to understand is it could be a stake sale of close to 5.8%. And remember, the proposed equity sale could go on to raise nearly 6,600 crore rupees. So we are going to see how that really works out. The floor price is about 2,925 per share for this stake sale. This is all report based, and we are going to see how it really pans out. But there you have the opening bell there for you, and Nifty sticking on to that 22,500 levels. We would say close to it, but rather flat, we would say, trading at this point. The Sensex too at that 73,900 level. So that one also oscillating and trying to hold on to that 74,000 levels that it managed to get to those new highs. But that's what we're seeing with the Sensex as well as the Nifty. If you look at the advance and decline ratio, of course, it's clearly towards the advances that you're seeing a higher traction towards. The Bank Nifty also succumbing to that some bit, just 0.2% down, but holding on to that 47,700 odd levels. So the Sensex there, the outlier one would say at this point is clearly the Nifty mid-cap index. That one holding out in the green, at least for now. Even the BSE small cap index, they're both of those. The broader indices really holding that strength, showing some bit of momentum compared to the benchmarks, we could say. Let's also look at the couple of other sectoral indices. The PSU banking pack, they're seeing some bit of pressure. That one down, and that's what you're also reflecting in the Bank Nifty overall as well. So the PSU banking pack also looking at some bit of pain this morning. Nifty IT, that one is what we will talk about in detail as well, because that pack, after all this noise about when Fed could go on to cut, that pack seems a bit happier right now, cheering in the moment. Nifty metals, though, down and about in trade, we could say. And let's also look at the consumer ones. The auto sector too there in the positive. So we can say that some bit of traction coming in for IT as well as auto in trade today, whereas it's the metals and others that are down and about. Let's look at then who's really participating in this movement of the benchmarks, and let's look at the gainers and losers on your screens there to give us a sense of what's really adding to this cheer. Hero Motocorp, Bajaj Auto, Bajaj Finance there in the positive, Cipla, UPL and Asian Paints. So you do have a couple of those auto names because we did say those were the auto index also quite cheery there. ITC, HCL Tech and Bajaj Finserv. So you have both the Bajaj twins, you have Bajaj Auto as well, all of them in the positive and your gainers this morning. Let's look at the laggards then in trade, and on your screen then the red Power Grid, Tata Steel, BPCL. So you do have the heavyweights, a couple of them, Tata Consumers, Tata Motors. So all of those Tata Group companies seeing some bit of pressure. This perhaps after all the news that came about of the Tata Sons IPO, and we'll talk about that in detail as well with our guest. Infosys, JSW Steel and ICICI Bank, your other laggards this morning. So even though we did see some names in the positive from the IT pack, the bigger names like Infosys, they're seeing some bit of pressure and trading in the negative. Let me bring back Prashant once again and ask him how he's looking at the levels that he had spoke about. Are we trading closer to those, and what should be the strategy now that we're seeing this kind of open?
So I think, Stacy, Bank Nifty definitely has shown some profit booking as I was expecting, but I'm waiting for a dip, the levels I had mentioned, and mainly because it has reacted to the resistance that I was tracking, which is 48,150 last week itself. So I think a dip, as I said, a cooling effect to somewhere around 47,400, 47,300 would be a good level to enter. If you look at today's open, I think a few stocks which are definitely standing out would be stocks like DLF. They look very strong, and I think they may be ready for the next levels of 950, 960 odd. So one can look out for opportunities here on any further dips going forward in the week. So I think that's one area we can target. As against this, if you look at metals, which were doing very well last week, are seeing a bit of profit booking. But I think that would be another area where you can look out for entries. If I were to pick, so Tata Steel would be my top bet in this sector, and any dip to around 150 to 150 odd levels would be a good opportunity to go long, keeping stop losses at 146 zones and looking out for targets around 160.
Right. Prashant, before we let you go, a couple of queries that are coming in, and I would like all of our viewers to continue sending their queries on our live feed, because we will try and accommodate them even though we are, addressing market open. We do like to take your queries and answer them. And Prashant, quickly to you, we're getting a query on Happiest Mind. Vignesh has gone on to buy it at an average now of 830 for a target of 950, 980 in the near term. Do you think that should be something you should be looking out for? This is Happiest Mind Technologies.
So if I were to look at Happiest Mind Technology, I think a major support for this stock is 800 odd levels. So I think you're bought very close to the support. So you can continue holding as long as the spot does not close below 800. And you can look out for the highs of the consolidation zone, which is around 875, 880 zones as your first target. And if we happen to close above that, your next level should be around 900, 910. So considering a risk to reward, I think the entry price is good. But more than the targets, I always suggest track the stop losses. So any close below 800 would be an exit point for you.
Quickly, Prashant, your two top picks for today and for the week as a whole. We also have CPI numbers, macro in terms in US as well as India, that are to be looked forward to. So what should be the strategy for this week, and any picks, your two picks for today?
So I think, Stacey, one stock, I would be looking out for a mix and match strategy, considering that the market may stay range bound. So I'm looking at one breakout and one stock which is forming a base. The breakout stock would be HDFC Life. I think overall the sector looks good, and you can look out for entries with stop losses around 605, 600 odd levels. Looking out for targets around 650, 660 on the stock. And there's a clear double bottom in place on India Cements. Overall, the pack looks good. A firm base is in place. So I think you can look out for a good move here, keeping stop losses below 210, 210 spot closing. You can look out for targets around 245, 250.
Right. So India Cements and HDFC Life are Prashant's picks for this trading day. Well, thanks so much, Prashant Sawant, for joining us this morning to give us those technical analysis as well as what the charts are really telling us. Thanks so much for your time this morning. Well, let's also move on then and get the fundamental side of the picture. And like we were just talking about, we do have macro cues to be looking forward to, and that perhaps be the drivers for where the markets are heading and whether we could hit new highs again. Yes, today we are seeing some bit of pressure, at least in these initial minutes of trades, but we will see how how we get into it, and for that we could say the landing has been the base is pretty set. We saw some good numbers, and what is expected from CPI tomorrow as well. We are in that range of 5.8%, and that is likely to continue, at least is what most economists are expecting. So let's get into the fundamentals of it and how and what is really going to drive market from here on. We do have a slew of IPOs that are hitting the market as well, and whether that is a good strategy to be looking at. Well, to join me and discuss all of this is Aishvarya Dadheech. He's the founder and CIO at Fident Asset Management. Good morning, Aishvarya, and thanks for speaking with us here at Money Control. Well, let's get into how the Indian markets will move from here. We've been seeing higher highs all through last week, and that has given us that momentum that we are in that pre-election rally of sorts. But are we likely to see some bigger corrections before we hit new highs? Should one already factor that in, you would say, for the market in the current scenario?
Good morning, Stacy, and good morning, all the viewers. Obviously, we are at great times. Market is almost all-time high, and this is nothing less than a dream run that we have witnessed so far. But there are certain things I want to bring to everybody's notice. As you said, that we have election around the corner, and as we have spoke earlier also, that the volatility will be the talk of the town. But if you just look at this 2 data points, in the month of February so far, your broader market has actually underperformed the large caps. So Nifty 50 continues to hold high. In February, they are up almost more than 2%, 2.2, 2.3%. But if you look at the mid caps and the small cap, they are down anywhere between 1.5% to 2% in different indices. So some sort of, I would say, profit booking is visible in broader market. Obviously, it has to do with we are almost closer to this financial year as in March, in the month of March. So some amount of profit booking when the investors close their books, and that is quite visible in the broader market. And this may continue to remain for some more time, at least a week or two. So that pressure is what investors should be wary of. Second, if you really look at, that we are hearing a lot of now warnings and noise across from the research houses about the valuations of broader market. And we at Fident believe that there's a lot of logic and reasons to that. If I just look at some very interesting data points, Stacy, right? Market from the month of, if I look at this financial year so far, Nifty have given almost a 30% return. But, large part of it has come from earning growth. The earning growth for the Nifty 50 over the last 10, 11 months so far has been tuned to almost 18, 19%. So the re-rating potential is the remaining 12, 13%. But when we look at mid cap, small cap, and most specifically the micro cap and SME, where the return has been close to 60, 70% for mid and small cap respectively. Micro cap is up almost 100% in the last 10, 11 months. There, the earning growth is close to 25, 30% for the different segments. But the earning re-rating, the re-rating multiple has been almost in multiple of what earning growth has been. For a micro cap, the re-rating is almost 70% compared to 30% of the earning growth. So what important mood point I'm trying to make here is that, large part of the stock price movement has been done because of the re-rating which we have witnessed. And even if you look at future, possibly the mid and small cap entity will possibly give us at best 30% growth in earnings. But that is more or less has been factored in. So there might be a time that, post-election, there we can see this, the returns from this category of broader market could be very, very limited, or there could be a time correction for a long period of time. So this possibly, the worry for the investors is whether the mid and small cap or the broader market can crack. One of the reasons which I would witness would be the dilution in the earning growth, which is not visible at this juncture. So, earning growth will still put up there, but the return from that is might be quite difficult. So investors putting money at this juncture have to be very, very careful that where they're putting up their money, in which segment, in which sector, in which businesses, where you have a very high potential of growth as well as earning ability. So money making from here is not going to be easy, at least in the broader market. We have already seen that money flowing to the large cap, and that could be the trend, Stacy, for coming months too.
Right. In fact, I was going to speak about, this rotation that we are seeing now from the small and mid cap back into the large cap. And that's pretty much the direction we've been seeing markets take. And especially after what SEBI's direction as well as AMFI have come out, in order to safeguard retail investors. And because there was that froth building up, we could say, in the broader market. But let's talk about sectors then specifically that we could actually be looking out for, whether it is even from the mid cap and small cap space. Now, if you take IT for that matter, and I'm bringing IT up now in the context of what we've been seeing and hearing from the Fed, we were hoping for a March rate cut, which seems very unlikely, but the macros there in the US are actually showing that maybe a June rate cut then might not be too far away. In fact, today we're also seeing how these mid-cap IT stocks are really reacting. We did have Jefferies come out with their call on LTI Mindtree, where they've gone ahead and given a buy rating, but they've cut those targets to just about 5,890. Now they've seen the senior level exits, including that of the CFO, all of this as those integration issues, and which is why they are quite wary at this point. So how should one really be looking at the IT play? Now, we have seen in terms of the earnings, you were saying if you have to just go by the earnings, we were already expecting that for IT, that, a couple of quarters more of pain is what one could expect. But then when you look at the bigger IT names versus something like an LTI Mindtree or a Tech Mahindra, where should one really be playing that game at this point then?
Yeah, so Stacy, IT looks very interesting to us at Fident. Not only the large cap IT, that is one possible area where investors should now move their money, would be in the mid caps and the small cap IT. Now, as you said about US Fed expectations and outcomes, depending on the, the inflation data, which was expected to be released out this week. But we're not really very excited about US cutting interest rate too fast or too deep. If you look at the Friday data, obviously, the wage, new employment opportunities in US came out much stronger. Obviously, there was a moderation in the wage, the rate growth, as well as there was a spike in unemployment rate. But I think, if I look at the data over the last 3-4 months on the inflations, there's one thing which is very clearly coming out is that inflation is now becoming sticky. And as US interest rate expectations are the target of getting 2% would be slightly tougher is what we at Fident are expecting through. So we are not expecting any rate hike, as you even said, in the month of March, this month. Possibly if inflations provide, give us a positive surprise on the downside in the coming month, then possibly a rate cut in June is what is quite probable. And its impact on IT will be quite visible. So, if I look at as you spoke about valuations, about mid and small cap and things like that. So if you look at the IT sector per se, and we look at the mid cap and the small cap sector, their valuations, so we are not seeing unnecessary froth over there. Obviously, the valuations are high if I look at from the 10-year average. But if I look at from the last 3 or 4 years post-COVID scenario, we are seeing valuations more reasonable from that perspective. Obviously, that IT has not come out of the blue so far. When we met a lot of management recently, and they are not sounding. They are sounding more like cautious with the view about growth and all that. But we believe market will start factoring it once the growth recovers in the coming 2 to 3 quarters, and with US Fed action on the rate cut, IT could be very remunerative from this perspective over the next 2 to 3 years. So I believe investors should allocate money to both large cap IT as well as mid cap IT. And one more thing, obviously, large cap IT is something which is trading at a valuation discount compared to mid cap IT as we speak. But the reason primarily is the differential in growth. So one has to create a right mix, Stacy, between large and mid on the IT pack. And I believe that could turn out to be a good strategy for investors going ahead.
Strategy on IT should be a pick and choose at this point between both the mid cap as well as the bigger names. But another sector that is quite interesting and we keep speaking about in the run up to the interim budget as well, we saw a huge rally, and this specifically to do with railway stocks. Now, Rail Vikas Nigam is another one that is on the radar today. Now, this after the company has received that letter of award, or LOA as we call it, worth 1,298 crores from Himachal Pradesh Electricity Board. They've also won another LOA from the Madhya Pradesh Electricity Board as well. So a lot of action, coming in there for RVNL, and that stock too has seen some a bit of returns. But let's talk about the whole PSU pack. Altogether, we'll talk about railway stocks in specific, and maybe Aishvarya could give us his view on that, on how one should be looking at PSU stocks. Is this a good time, or you've already seen, the valuations that re-rating happen in this run-up, and now the valuations have got stretched, and which within the sectors for the PSUs would still be an interesting buy? We did speak about PSU banking names, but those ones also now have pretty much reached those valuations as they might be lower compared to private banks. But Aishwarya, what would be your picks when you're looking at the PSU lot, and in this run up to the elections, is it a good time to enter, or is it just froth building, you would say then?
No, so it's very interesting, Stacy. If you look at, the momentum continues of the capex, right? What is the most important thing which market has learned about this new government is, that they walk their talk. That is which is very, very crucial, So if you remember when they initially talked about defense and railways many years back, possibly, the investor community, especially the institutional investor community, were not very excited about that. And then when they started looking at the execution part, when they started looking at the capex spending and, things, when they went out on ground, and they were all pretty surprised. And then we saw what re-rating happened in those sector of defense and railway, and that continues today, even with all the order book which we are hearing. But if you look at the specific sector of PSU, right, possibly if I have to speak on railway or defense, I believe, money-making opportunity for investors from here onward is very, very bleak, because valuations are so stretched up. Justifying valuations on the whole thesis could be very, very tricky. But, this is not to get disheartened. What the investors should do, as for what we are thinking through at Fident, is what this government is trying to do next. Right. If you look at sectors in energy or power, right, we are at almost 240 gigawatt of thermal power capacity today. Now, government is talking about putting up a lot of capacity in renewables, solar, nuclear, hydro. Possibly that is one sector that if this continue to see those kind of capex or intensity which we have witnessed in railways or defense, it could completely be a game changer. And you don't have to necessarily play the PSU part to it. Obviously, there are many players who are PSU, but there could be a lot of other players in the whole value chain, whether it is, the product supplier, whether it is, transmission, whether it is other ancillary products, both in private and PSUs. That could be the big game changer. Similarly, if you look at, our Prime Minister is talking a lot on housing per se as a theme. And housing is a pretty blanket, whether right from credit to materials to infra spending, real estate. That could also be an area where investors can play both PSU as well as private mix for this theme to play out over the next 4 or 5 years. Obviously, there's a big caveat here that we need this continuity in the policy which has been announced. That is one big outcome which we will have in the coming couple of months with this election. But I think as an astute investor, we will be more inclined to play what next rather than what has already happened. And this just doesn't, limit to housing or energy or power sector. Why not new age businesses? If you look at, the kind of support that this government is providing to all of these tech-enabled businesses, and even their focus on coming profitable is very, very exciting. Similarly, say gas pipelines, with this government focus on providing connectivity to the last mile. There are many companies in the sectors who will see a huge amount of capex and growth. So I believe, Stacy, there's many opportunities in PSUs. We have to be very careful about the theme playing out for the next 3 to 4 years, and obviously with a lot of respect to valuations.
Right.
So if you were to ask me simply whether I will go and buy defense stock and LV stock at this juncture, possibly very, very careful.
Right.
But various other sectors where government is focusing on, I believe there's a huge opportunity in that sector.
Right. So interesting to see that, maybe a railway and defense, not at this point is what you're saying, but other interesting sectors like city gas distribution and others that could be an interesting bet at this point. But let me quickly also ask you about this whole China plus one strategy and how that is really going to play out, especially for India, because of course we've been seeing a slew of FIIs pretty much, flock back into India. We could say just in March alone, the past 10 days, we've been seeing good FII, FPI buying, that money coming back into India, we could say. But, there are sectors in this that might not really benefit, or we've already seen that play out when it comes to chemicals and how that has really panned out. So how should, is that something that we could still bet on? And, with China now seeing some bit of this deflation, exiting that territory, you think money could then even still divert back to China, or India still, has those benefits and could continue to gain from that China plus one strategy?
So I think, Stacey, that's a great question. And, this China one plus one strategy is obviously gaining a lot of ground because, that learning from our COVID, not depending on single country for your most important country-specific resources actually has got a lot of traction. And obviously, India is a big beneficiary of this because that is combined with the India's government strategy and focusing of PLI and manufacturing, things like that. And that is visible with the kind of FDI we have seen, the kind of production that we have seen in electronics, in chemicals, in intermediaries, in pharma. And I believe this has a long way to go. The tailwind is very, very strong and this will continue. But if you look at various other countries have also massively benefit out of it, whether it is other Asian countries, specifically, whether it is Vietnam, Malaysia and other ones, possibly India will have to tighten its belt, gain larger share of it. And with the current focus, I believe it's just a matter of time. But if you're trying to connect, China plus one and, the way FIs are looking at it, there might be some bad news also for the investors, So obviously we have seen good inflows by FI in the month of March. But if you look at January and February data so far, we have almost seen more than $3.5 billion of outflows from FIs out of India. And when we're interacting with a lot of these large FIs globally and their team, one thing which is really coming out of is that India is expensive, right? And a lot of this money is now flowing to other Asian countries, other emerging market countries, So core amount of money with India for these FIs are there. But, now the money chasing in China can't be ruled out. They are at throwaway valuations. Even Japan has become very expensive, given the rally of the wind across almost 40,000, the index. But various other markets, whether it is Indonesia, whether it is Korea, whether it is Thailand, they're looking much, much attractive compared to India. Even if you look at, Stacy, on the holding percentage of FI of the Indian market, we are almost at an all-time low. So obviously it can be taken as a positive that, post this election, we might see a complete U-turn where FI will start investing more. But anybody who is very serious about India as an investment team will not wait out for that event. They are already there in the market. So I am not riding too much hope on FI's supporting market. And that is one of my important area of worry because see, what have been market will supported is by mutual funds, SIP flows, and obviously the retail investors. And if we see any event where possibly there is a loosening of confidence, then possibly the broader market will be at higher risk. So that's what my point is. Obviously, today we have heard about, this new deal with ETFA, where possibly we can say $100 billion of investment in FDI and almost 7 million jobs as what government has spoke. I believe initiatives like this, along with PLI enhancement, or, when you look at manufacturing as a percent of GDP, possibly we are not at our best today. That has to also pick up. But all of these things, when come together, I believe India's growth story has to see a lot of impetus from manufacturing. And that is what we are really, really excited about.
Right. So quite interesting there your take saying that, we need to not completely rule out China. They are still lurking there. So those funds could perhaps get diverted there. But thank you so much, Aishvarya Dadheech, the CIO at Fident Asset Management, for speaking with us this morning. And to all our viewers who've tuned in, thanks so much. Do keep sending us your queries because we will try and get them answered. But before we let you go today, well, we did have overnight, pretty much this early morning, we could say, where we had the Academy Awards, or what is popularly known as the Oscars, which just concluded a couple of minutes ago. And of course, we did have Oppenheimer pretty much rule the roost there, 7 out of the 13 nominations, clinching all of those. Cillian Murphy going on to win the Best Actor award, whereas Robert Downey Jr. for winning that supporting actor role in Oppenheimer. Now, the film has also gone on to win the Oscars for the Best Cinematography, Soundtracking and Editing. We also had Ukrainian war documentary 20 Days in Mariupol, which has gone on to win the Best Documentary Film in the Oscars 2024. So quite some interesting takes, and you can get all of that and more on our website. That's where you're going to see all of those interesting tidbits, as well as our YouTube page, where we're putting out all that went through overnight at the Oscars and what you don't need to be missing out for, right from the fashion to what really is in that goodie bag that the nominees take home. You'll get all of those details. But with that, it's a wrap from the entire team that puts this piece together. Thanks so much for watching. Do post us your feedback in the comment section and follow us on the link at the bottom of your screen. And for the rest of the updates, continue at moneycontrol.com as well as the Money Control app.